Okay, good afternoon and welcome to this Community Shares webinar with myself, Mark Holmes from Crowdfunder, and I've also got Dave Boyle from the Community Shares company joining us.
Hi everybody.
So this webinar is one of a series, but today we're looking at essentially what are community shares and what do they mean for communities around the UK. There's various options out there, and we'll talk through giving some examples. There's a particular one on Crowdfund at the moment up in Scotland, the Glenville Distillery, which is going well. They've raised over £1 million towards their 1.5 million target, and but also we've got projects that are looking at one on their trash to treasure, which started out looking to raise 30,000, and they're well on their way to 50,000 now, and beyond for their extension. So we've got lots of various sizes and scales of projects, and just to point out that we're obviously waiting for your questions, and we'll answer those as they come in. If you want to use the hashtag CFComShares, then we'll monitor those throughout the webinar, and we'll ask those questions, whether they're to myself or to Dave, and we'll do our best to answer what we can. So we've had a couple of questions come in before, one of which seems like the best place to start, given as so this is, what can Crowdfunder do to help me with my community share offer? So that seems like quite a logical place to start. So Crowdfunder, we offer the platform by which you, to all intent and purpose, market your share offer. So, and then we have our partnership with the Community Shares company, which is why Dave's on the call today and joins us each time of these, because he's our expert on community shares and we'll know the ins and outs. So we'll give him a chance to sort of explain the detail of community shares. But really, you sort of come to Crowdfunder when you're ready to launch your offer and to get investment. So Crowdfunder has the functionality to accept payments and process them, so they come through to you as an organisation and enable you to go on to do what it is you need the money for. That might be to buy an asset, it might be to start a project off. There are very many reasons why you might do a share offer. We can also do pre-launch phases, so you can gather some information, and we'll help you with marketing and comms around your offer. So you'll get a dedicated project manager, someone like myself, who will work with you throughout and will help you to navigate your way through crowdfunding. But the really important bit that goes on before there is the work that Dave will do with you through the Community Share company. So there's three things that you'll need. It's probably best for me to let Dave explain them in detail, but you're going to need to register a society, you're going to need to create a business plan, and you're going to need a share offer that we can market. So I guess that might be a good point, Dave, for you just to give a little introduction and an overview of some of those key points.
Yeah, thanks, Mark. I'll take them in order of ease. First thing to say is community shares are only able to be issued in specific legal entities called societies rather than companies. So the first thing we need you to have done is to make yourself a society. So you can't issue shares if you don't have the legal ability to issue shares. That's a false contract, so that's not allowed. So we need to check that you've got the right legal structure and that legally you can honour the promises you make to your investors. We do that by checking your rules, and the process by which you become a registered society able to issue community shares will vary potentially from the sector you're in, because different sectors tend to have sort of model constitutions for you to use when registering, which have been tailored for your sector's needs, which is to say they should work pretty well for the kind of business you're looking to create. We can give you some advice on signposting you to those people, but in our experience, most people are aware of those already. Second thing you need is the business plan, as Mark said. The business plan demonstrates that you're serious. It demonstrates that you know your onions, that you're to be trusted with the money, that you've got a plan in place that doesn't involve you going, crikey, we got the money, eh? What should we do now? That you've got an actual plan about how you will spend that money and how spending that money will lead to certain revenues coming into your society, and how using those revenues you'll be both sustainable so you can keep on keeping on, and secondly, how you can use those revenues and hopefully a surplus to support any aspirations you make to your investors about what interest they might get on their share capital, when and whether they might ever get their money back from you, all of that will need to be explained by essentially how much your business can support. So if you say, we can support 3% a year interest and we hope to give everybody their money back in 10 years, that's great. But you need to have the numbers showing how that's not ridiculously pie in the sky, and how those aspirations are supported by reasonably robust assumptions. So you're not full of wishful thinking and that, you know, you're hoping for the best rather than having a plan for how the best will actually happen. The final thing you'll need is a share offer document, and that to some extent will vary on how you're doing the share offer. So if you're a more locally based community benefit society, perhaps maybe looking to buy a pub or open a shop, it might be that actually as much of the marketing, if not more, takes place offline. It'll be door to door. It'll be you handing things to people, organizing events physically in the community in which you're looking to build your enterprise and raise quite a lot of the money from, if not the majority. Others will not have any offer documents like that. There'll be nothing printed. So Hastings Pier, which is currently on its second share issue, live on the Crowdfunder site as we speak, they don't have any offline documentation. It's all online. They've got a Crowdfunder page. So it will vary according to how much your marketing plan says you're going to be doing online and how much offline. But if there is, all the documents which you produce need to be available for everybody, because they form the basic contract between you as the investor giving you money and you as the society receiving the money from those people. So those are the things which you need, and those are the things we can help with at the Community Shares Company. And how much help you need and how much we can give will sometimes depend to a lesser or greater extent on what sector you're in, what stage you're at, what other support you've got. Some groups are incredibly well blessed by having some really great people on board who can help them with all of this. Others really need some help with some of this stuff, whilst they've got other things absolutely in spades. The other thing which we don't need a piece of paper to demonstrate, but is probably more important than all of them, is for you, the organization, to have warmed up your crowd. A lot of people, regardless of whether it's rewards crowdfunding or community shares, think that when you put it on a website and go, hey, everybody, it's there, that magically things happen. And the magic actually happens when you talk to the people who you think will be interested. Crowdfunder and crowdfunding platforms in general can do a lot in making it easier to share what you're doing. But fundamentally, it comes down to how much people are seeing you, how in your face are you being, how much are you stressing to people how important this is, what a great opportunity it is. Because the best crowdfunding platform, the best business plan, the sexiest copy, the greatest video won't get round the fact that if you've not been speaking to people in advance, your share offer will be unlikely to succeed.
And I think that proves a nice place for me just to pick up on. One of the things that we're always really keen to work with groups on is around the marketing and engagement. We map out your network. Who are the people who are going to invest, and how are you going to get this in front of them, as Dave said? Because lots of groups do all the important work, and we know this. We know they're going to go out and they need to do their share offering. They need to put legal contracts in place if they're buying something or planning to get an asset. But they forget to talk to people because they're so busy with everything else. And as Dave said, there's not really an opportunity to just find people. That, you know, there are people out there who invest in great community assets and great community projects, but there are not thousands of people waiting to look at every offer. You have a sort of responsibility, and we're here to help you map that out. But how do you engage these people and get them to invest? Because they're going to be the key to a successful share offer. You'll be able to map out where these people are and who they are. And we can help with that. We can do things like a register interest page early on Crowdfunder, where you can generate interest, get people to log their email addresses, and even tell you how much they might invest, so you can map that. And then you want to be confident when you launch that funding's going to come in. What you don't want to have is a sort of a staggered start where you sort of go live and nothing happens, and then a few pounds come in and then a few more. You're always going to get interest at the beginning and interest at the end, but that doesn't happen by luck. That happens because of the work you do. So There's all the work to be done with Dave, and Dave can help with that through the Community Shares Company, and then we're here to help with the actual offering point. You know, how do we get this in front of as many people as we can to help you across the line?
There's a phrase which I just keep bearing in mind, everybody. It's a lovely phrase from Australian politics. You can't fatten a pig on market day. You fatten the pig in the weeks and months leading up to market day, and it's exactly the same with your community share issue.
Okay, so just a reminder that if you've got any questions, if you want to use the hashtag CFComShares, and we'll keep an eye on them, and I'll put the questions to Dave, or I'll do my best to answer them myself. One that leads on a little bit from where we were talking, Dave, and you sort of said some groups are blessed with resources in areas, and others need more support. There's someone that has asked anywhere in particular they could get help with their business plan.
I mean, it will really vary. The most obvious place to go for your business plan, assuming you're a community enterprise rather than a sort of proprietorial business, is somebody else who's probably done what you're looking to do. People in the community pub world, for example, are a wonderfully sharing lot, and because your pub's usually nowhere near their pub, they're very happy to share with you their business plan, because they just like other people to be a bit more like them, and they wish you all the luck in the world, and they'll help you get there. There are organisations who can also help depending on your sector. So if it's an energy project, there are organisations supporting community energy projects. There's community pubs, community shops, community sports clubs. It really will vary. So rather than going for sort of generic business support, which you can go for, there are places where there are people who provide that. There are funding programs you can access. The first port of call should be other people running businesses like the one you want to create, and the organizations who supported those people, because they'll probably be able to support you. If there aren't any businesses which you can find, then there might be other businesses which, aside from being not run by the community, they are very similar to what you're looking to do. And again, see if you can get some information from them. There's information on Companies House. Probably won't be particularly enlightening, but you might get lucky. But you can usually start from somewhere. You can talk to people, even if they won't give you their Excel spreadsheets and their actual business plans. You should be able to talk to those people, or people who know about it. So depending on what you're looking to run, if you're looking to run a pub which has closed down, try and find people who used to work there. Or if it's a shop which used to be there, find people who used to be there to tell you about things like footfall, which might be, and passing trade. So, you know, you look at the things which drive whether your business is likely to be a success or not, and find out who's got information which is reliable, which can help us plug that data in, which enables us to have a better idea whether the assumptions we're making are realistic or ridiculously optimistic / wishful thinking.
Thanks, Dave. And from time to time, there are funds out there that can help you around certain types of projects. So obviously, quite recently, there's been the Plunkett Foundation have been running one for pubs, and from time to time, there are others around. So it's just a case of checking time you're looking.
Yeah, and give us a shout, because we can signpost you to the programs which are available, if they are available for you. And not everybody is, but and even if you are eligible, sometimes they're not quite right, because they involve you applying for grants, and that can take 2 or 3 months, and it might be that your needs are much more sort of time constrained than that. But do get in touch and we can see what we can do.
Okay, so again, just a reminder, it's hashtag CFComShares for any questions. So we've got another one coming in, quite a general one, and as this is a general community shares introduction, this is quite a handy question. So it's really, what are the first steps seeing whether or not a community share offer would be acceptable? So I guess, Dave, probably I'll let you do it now, and I'll throw in any pearls of wisdom I may have. Okay,
well, the first thing, I mean, it tends to be, the first thing to say is you can't do a community share offer on your own, not just because it's involving quite a lot of work, but there's something about speaking to other people and them going, you know what, you're not completely bonkers. This might just fly. If you can't find anybody to work with you, then it might be that there's a message being given to you by all these people, which is, it's a lovely idea, but not in this plane of reality in which we exist. So starting to talk to other people and sharing the idea, because ultimately you will be sharing ownership with the crowd, and starting that idea that it isn't all about you is essential. So finding other people who go, yeah, this is one, it's a good idea. Two, it's such a good idea, I'm actually going to help you take it forward. That's a really positive sign. By comparison, the absence of other people working with somebody set an alarm bell ringing to everybody you might look for help with, and they go, actually, this looks like a one woman band, a one man band, and that tells its own story. It's like going to a party where there's only one guest. If you walk in as the second guest, you're starting to think very nervous things about how you've made a mistake and shouldn't have come here because you're kind of stuck. So there's that aspect of it. You can't begin the journey of engaging with people too early. Even if you're not ready to say, we've got a brilliant business plan, we think we can make this work, start by discussing the business case. Does our area or does our community have a need for this thing which we might be raising money for? And if people go, yeah, brilliant, that's exactly what this area needs, or it's exactly what this community of interest needs, and if you can come back to us with some worked out sums which show how it's viable, we're totally behind you. So don't wait too long to try and prove the concept to your own satisfaction. Test it with the crowd. And that's the other thing about Mark mentioned about grant funding. A lot of groups in our experience they spend an awful lot of voluntary time in between very busy lives they're leading, and they get very protective of the idea. And then they always have a nagging doubt that maybe, just maybe, we're the only 7 people who care about this. And so they put off the evil day when they test it in the real world. But the other way to do it is to test it as soon as is humanly possible. Because if the crowd think it's a terrible idea, then it's a terrible idea as far as the crowd are concerned. And if they think it's a terrible idea, they're not going to get involved in your community share issue. So it doesn't sort of invalidate your idea. It just means community shares are probably not going to fly at this stage for it. So the sooner you find that out, the better, because if it's not going to fly, great, you've not wasted loads of time. If it is got a chance of flying, you've now not only got that strong idea that it might support, you've got those people owning that idea. They're now knitted into the project. They're part of it. And secondly, you've got a spring in your step and the inner confidence, which goes from knowing that there are a bunch of people out there who think that this has got legs, and you just have to bring it to fruition. And you can go back to those people as their volunteers who can help provide the skills you need. So the sooner you start asking people in your community of interest who you're looking to support the community share offer, ask them, do they think it's a crazy idea? Do they have any better suggestions? Would they like to be part of the group taking it forward? And all of those things are really positive, because in the absence of them, you're not going to get this to succeed. And if you've got them, you're going to have a much, much, much better chance. That's the sort of, I mentioned about fattening the pig on market day. That's starting to fatten the pig from the very moment it's born, to continue analogy to beyond what it can support.
Yeah, and I think just building on from that, we've seen an example where, so I'm based down in Newquay, and there was an opportunity. One of our local beaches was going up for tender from the local council to run the shop and things on there. And some of the local residents decided it might be interesting to try and take over that beach. And they did it. They just set up a Facebook group and put it out. And over the weekend, they had 140 people join that group to say, yeah, we think this is a great idea. So it gave them that confidence to proceed. Unfortunately, due to the timelines involved, they weren't able to take it further, but they know if other ones come up, they've got that core group of people who are willing to get involved. And from that, they can start to see what expertise they've got in that group straight away. So it's just an example where modern technology and the sort of social media can really play into your hands at that point.
Yeah. And the other thing to stress as well is that there's a fine line between being overly needy and saying to people, if you don't get behind this, I can't do it all myself. That's not a great look. If you say, we need people to help make this as good as it can be, it's a slightly better offer to those people. But you have to let people know that the consequences of them not letting you know that they support it is that you might walk away, because you've not got that validation you need to know that there's actually a project here which is worth spending time and in some cases money on. So don't be shy at letting people know that if they get behind it, an amazing thing can happen, and if they don't get behind it, nothing will happen. So they can know that they need to roll their sleeves up too and help you out, and rather than leave it all to you to get on with it because they think you're doing a grand job, they don't realize that really you're desperate for the humans to help you, and then that if they do help you, this is actually going to be much easier, quicker and better.
And even if she's going back to the really simple point, you're going to run a community share offer to get finance and get money. If each one of those members gives even the minimum level of investment, if that's £100 in your organisation, and each one of your members does that, and they've all got 5 friends that they can bring in, suddenly you're well on your way to having quite a good starting point for your share offer. So from day one, if you bring them on the journey, as Dave said, they'll be able to put their hand in their pocket and convince friends and family to do the same, because that's what crowdfunding is all about. It's about bringing other people on your journey and getting them to back it. So I'll just have a look for another question. So we've got one, I guess it kind of links on from this point where we've been talking about in terms of first steps. So I've got a question around assets of community value, Dave, and how people would register that. I mean, I guess it might be worth first of all to say what they are, in case people are unaware.
Yeah, okay. So in 2012, there was a thing called the Localism ACT, which gave people in communities the ability to designate land or buildings as assets of community value. They're not just run-of-the-mill places. They give life to a place. They're important and they provide community benefit to the community around them. And once you've nominated that, you only need 21 people, or if you're an established group, you can do that straight off without needing to do anything more. And you go to your council's website and you will find out whether they might have a form available, or they might tell you to write them a letter. But you send that to the council in whatever form they've requested it, saying who you are, what the building or the bit of land is, and what community benefit it provides in currently or in the recent past. And the council have to look at it and decide whether it is an asset of community value. And to be honest, it's quite hard, unless you're choosing the wrong kind of building. It's quite difficult to demonstrate that something isn't an asset of community value, if it's not, as long as it's not something like a residence, which is excluded. So it's, you know, the things are stacked in your favour to some extent. Once something has been given that ACV status, it does 2 things. The first is that if there's a planning application to do something with that land or building, the council can use the fact that it's got an asset of community value status as a reason to not give planning permission. So they might think it's a terrible idea to knock that pub down, but they need a planning hook to hang it on, or they'll get taken to an appeal, and they can use the hook of it having an ACV. They can say, this isn't just an ordinary building, this is an asset of community value, and therefore it's right that we don't allow a developer to knock it down or turn it into something completely different. They don't have to agree with that. They could say, even though it's got an ACV, they can still, the developers can still do whatever they like with it, but it gives you an opportunity. And if it's a pub, that's a particularly strong opportunity, because it means that the what's called permitted development rights, what an owner can do without needing to have planning permission to change the usage, all of those rights are suspended if it's a pub with an asset of community value status. So if you're talking about a pub, it's really, really a powerful tool. That said, the second aspect is also powerful, but much more tricky. And if something is an asset of community value, for the 5 years after the council say, yep, it is an ACV, if the owners of that building or that land want to sell it, it's not a legal sale unless they first notified the council, who then tell you that building you said was an asset of community value, it's on the market. Do you fancy having a go at bidding for it? And if you say yes, you get up to 6 months to lodge a bid, raise the money, develop a business plan, do whatever you're doing, and then lodge a bid. And in that 6 months, the landowner or the property owner cannot sell it to anybody else, only you or another group just like you, who in the same area. Downside of that, obviously, is that they don't have to sell it to you. They don't have to give you a fair price. They could say, yes, you can buy it, but you have to give us 10 squillion quid. And you say, but it's worth 50p. And they go, hey, them's the breaks. So there's no right to buy. It's just a right to bid. But in some cases, that's enough. Because you can use the campaigning time, the 6 months, to really galvanize the local community. But in reality, that ACV is only going to be triggered and become something you can own if you have found a way to raise the money in the first place. So you're not going to get it much more cheaply than it's worth. You're not going to get it at a knockdown price. But it does give you an opportunity to be part of the process, which people didn't have before. But the main thing in where this community shares comes in is that the vast majority, it seems to me, of things which have become community owned as a result of those provisions under the Localism Act, the community have done so because they've done community share issues. And the key thing to remember is that once you've got your ACV status on your land or your building, don't stop. Some groups think, well, we've done it, that's that phase of the campaign done. It's true, that is a phase which has been completed and well done. But if the owners decide to put it on the market, 6 months is not very long at all. In fact, it's rarely enough time. Most community businesses take between 18 months and 2 years from first inception through to having the keys and opening the doors and saying, come on in, everybody, we're open. So 6 months is a very short space of time. And so you need to be ready to move if the owners put the property on the market. So all the stuff about your business plan, about your community engagement, all needs to be pretty much ready to go. So the only thing you have to do is to use the 6 months to engage the community and raise the funds. And it's a useful tool, but it depends what you're trying to achieve. If you're just trying to stop a pub being sold and turned into flats, great. If you want to use it to deliver community ownership for a business in your area, it's part of the armory, but only a small part of the armory, and not one which gets you anywhere close to where you need to get to if you're actually going to achieve that goal.
Okay, thank you very much, Dave. Very detailed answer there. A couple of questions coming in. I just think so I guess one linked to someone with an idea for a project who just wants an opinion. So I think we could go to that, and then we've got a couple of other questions that may follow on nicely from it. Just a reminder that if you use the hashtag CFComShares, and we'll put any questions to Dave. So we've had an inquiry saying, we're planning a project to support street homeless. We've got our business plan, projected cost, and a committee. Could this work as a share offer? So I suppose it's quite high level information we've got there.
Yeah. I mean, let's do a very rubbish version of Dragon's Den. And the first thing what jumps out at me is that the client user base of the project is homeless people, tend not to be able to pay for services. That's why you're raising money, because they're not an effective market, as it were, for the business. That's fine, but the big issue which jumps out at me is how sustainable is this project? How are you gonna? You've raised the money in year one. That's great. Does that money take you through for the next 2 or 3 years, or do you have to do it all over again in 18 months time or in 12 months time? So sustainability is one of the things that, your business plan needs to do more than just show how you can cover your costs. It's how you move on to a medium term sustainable footing. And it may be that at the end of that, you're actually saying to people, realistically, we're going to have to do this all again in 3 years' time, or we can't ever promise to give anybody any money back, but you do get to live in a better world because of your investment. Those kind of offers can work, but they need serious engagement with people. They need people to really passionately believe in them, and they need to have been warmed up to it for some time, because you're giving them very little in return. You're not giving them sustainability. You're not giving them their money back. You're not giving them, because the project, whilst they might own the project, owning a project which has got very clear needs and very clear beneficiaries, and it's just about doing the work. It's not really much stayed in there for sort of shaping how you do things. So the offers kind of all based on who wants to live in a world where a project like this helps homeless people like that, and are you prepared to pay to live in that world, pay your share and join in our community share issue. And that's the challenge. That's quite a hard sell. It's very similar to a standard donation, and unless you're looking at significant sums of money, i.e. sort of 50,000 and above, it may be that such a project might be better testing the water with something like a donation or rewards-based crowdfunding, because actually that feels maybe a little bit closer to what the kind of relationship between the person backing the project and the project will be. Because that's the other thing about community shares. It's not just about a large sum of money changes hands. In return for a large sum of money, people get to own something, and that gives them rights over the board of directors and so on and so forth. And so you need to have a, shall we say, a compelling proposition worked out for what does it mean to own a homeless project, because it's not about you, it's about the beneficiaries. So thinking through what your offer is to those people will be critical.
Okay, thanks, Dave. And as Dave mentioned, rewards-based crowdfunding can often be a really good way of testing the water and testing the market for any sort of early stage idea. Gives you a chance to just see if there is that buy-in, even to fund some of the early stage development work that's required for your share offer, and get that bank of supporters there from day one. So a couple of questions that have come in. So one, Dave, is quite a common question we get, and I know you have a good answer for this one lined up already, which is, are community shares transferable?
Yeah. In a word, no. They're withdrawable, not transferable. That means that when you buy a community share issue, the only circumstances under which that share which you've bought, the membership you've bought in a particular society, can be transferred to become someone else's membership or shares is upon your death, and that's not ever nice to talk about. So we don't talk about it. So the in a word, no. If you buy shares in a particular entity and you want to sell them to somebody else, that can't happen. What could happen though is that you could say, okay, I've got 500 shares in my local pub. For it is always a pub, which we use as an example because they're a really powerful example. So you own £500 worth of shares in your local pub, you're an owner of the pub, you've got a vote for the board, and somebody else comes along and says, I'd like to be an owner too. You point your friend who would like to give you £500 and you point them towards the pub and say, are you taking new memberships and new investment from people? Because if you are, then maybe you could look at giving me my money back using the money from that person who's come in. And that's one of the ways in which community share offers and the people investing in them get some of their money back. It's essentially like a one in, one out when you go into a quite popular nightclub, which apparently people do these days. I wouldn't know, I'm too old.
So another question is that we've got in around are community shares a safe investment? I think there's almost a standard answer to that, which is any investment carries risk, and it's obviously for you to read the business plan and look at the offer document and make a decision on the level of risk you're willing to take. As Dave said at the very beginning, different offers will have different benefits for buying into them. It could be a financial return. It may be that there is no interest paid, but there's a chance of getting your money back at the end. But I think simply all investments are a risk, and you need to judge that. Dave, anything you would?
But it's just one of the beauties of community shares is that they're investment for ordinary people, for the rest of us. So most investment in a pension or a PEP, it's full of very boring language and legalese and accountancyese, and it doesn't feel particularly accessible. A community share offer should be an engaging project where you can look at it and say, what are they offering me? What are they offering the community I live in? What are they offering the beneficiaries of this project? And so the issue of what does safe mean will vary from people to people, from project to project. Are the people going to deliver the project? Don't know. Read the business plan. Do they look like a bunch of muppets, or are they good people with the skills to deliver it? Are they going to deliver the impact for the people they say they're going to deliver? Don't know. Ask them. Ask them how are they going to measure the impact they make in the world. Are you going to see your money ever again? Really will vary from project to project. Some projects, it's all about working capital. Once it's been spent, that's it, it's gone unless new money comes in. If you're buying a building, then even if the business you run out of the building fails, there will be a residual value, which means that if you wind the business up and say, we tried our damnedest, but it didn't quite work, you could sell that building and some of the money could repay some, if not all, of the money you've invested. So it really will vary from project to project, the nature of the assets the project will acquire with your money, and whether it's pure working capital or whether it will be fixed assets which will be purchased, and also what does safe look like to you, and what's the baseline which you want to see. The whole point about community shares is that people find their own level. They invest in projects which feel safe enough to them, considering all the risks which Mark mentioned, but where the reward also matches what they want to see. The reward might be personal, it might be about interest, it might be about some of the rewards which attach to the shares, which are often about using the facility which is going to be created using the investment, or it might just be about the change which gets made in the world. So positive news, one of the first share offers we worked on with Crowdfunder doesn't promise to get its investors anything back, doesn't promise an interest rate. It's all about working capital, because nothing gets bought which can be sold at a later date if it all goes wrong. So the real value is, do you get to live in a world where the magazine positive news gets read by lots of people and they get inspired to make the world a better place? And that's the metric. So that, what was safe there, are they safe enough to be worth spending money on to try and do that job well? And the answer from the issues they've done so far is hell yes, they're doing a fantastic job. But that's a very different kind of risk analysis than our Dragon's Den type of investor would look at.
Okay, so I think we just got one more question, unless anyone wants to put a late one in using the hashtag CFComShares. And we sort of already answered this in a way with Dave's last comments there. So the question is around, is there benefit to buying community shares that are not in my own community? And I guess that goes back to the point we're saying, it really depends on the return and what you're looking for. Is it a social return? Is it a financial return? And each offer will vary accordingly. As Dave's pointed out with the example of positive news there and others. So, Dave, is there anything you would add to that?
It's each is contextual. Do you care enough about the benefit to the community who are going to get that benefit to want to put your money on the line to make it happen? And if the answer is yes, then it's buyer beware. You look at the risks. Are the people credible? Is the business plan credible? And if that community or the beneficiaries of a project, knock themselves out, it looks fantastic, but it's not for me, then you pass on it. The numbers might stack up fantastically, but the social return doesn't really float your boat. And with community shares, the social return is more important than the financial return. That's not just my ethics or my values. It comes with the territory, because the legal framework is governed by the Financial Conduct Authority, and they insist that the primacy of social return over financial return is absolutely intrinsic. So if you don't have that social return, not only have you got a problem with your investors and who the beneficiaries might be, you've also got a problem with the legal structure you've just created.
And it's probably worth pointing out that some community share offers can be eligible for tax breaks as well, which might give a different reason for investing in an offer that gives a different type of return from the more traditional return on investment.
Yeah. There are 3 tax breaks which you can get depending on your circumstances. Not everybody can get them, and not everybody can get any of them. But we can help with that. It's something we've done with the project you mentioned at the start of this webinar, R4C. We got them a thing called Seed Enterprise Investment Relief, which means everybody who's invested in that project, if you've invested £1,000, you can get 500 written off your next tax bill. So essentially, you get the benefit of £1,000 worth of investment at the cash cost of £500. There are other benefits which aren't so generous through other tax breaks, which would be the equivalent of £300 off your tax bill for £1,000 of investment. And they can do quite a lot of work to make your offer maybe more financially lucrative than the business can support. So it may be that actually you can just about get your way to being sustainable and maybe getting everybody their money back over a 15-year period, which isn't very good really if you're offering them nothing else, because they could have been earning interest in the bank with that. But if you factor in a tax break of 30% or 50%, it actually becomes quite a reasonably well-performing investment. And in our experience, people who can offer people like investors the opportunity to A, make the world a better place, B, not lose any money in doing so, and C, maybe make a little bit of money ethically. Very few people are interested in turning down that opportunity, because very few people don't like the idea of making the world a better place at no real loss to themselves.
Thank you very much, Dave. And I suppose really talking about tax is probably the worst place to stop it, because probably opens up a huge amount of questions. But we haven't had any in as yet, and as Dave said, we can help. Or more specifically, Dave can help. I wouldn't pertain to be able to give advice on tax, but Dave can certainly help guide you in the right direction. And probably a good place to wrap up, as we haven't had any more questions in. But just to sort of say that obviously Dave is able to help and advise on the nuts and bolts of community share offers and the things around that. And Crowdfunder, we're sort of more around the marketing and the offer that you would make and how you would get that out to your community. And the two organisations combine to and have done to good effect, as has been seen by the successful offers on the platform at present. There is an inquiry form on the Crowdfunder website, which will enable you to send a short inquiry in, which will be sort of triaged by a colleague of mine, and we can introduce you to Dave at the relevant time, or you could contact Dave through his website at the Community Shares Company. Anything else, Dave, you'd
Nothing to add? Thanks for everybody for participating, and do get in touch if there's anything which we've said here which you want us to find out in more detail about. We can arrange to have a quick chat with you and answer things much more quickly over a phone call than perhaps email.
And also, if you do get in touch through that inquiry form on the website, we will add your email address to our Community Shares newsletter, which we send out monthly with relevant and live offers and information around grants or support that might be out there, and to give you an idea and perhaps even a little bit of inspiration as to what's there, or even a possibility of a project you may want to support yourselves. So certainly worth registering on that to get up-to-date information as and when it becomes available. So other than that, just thank you to you all for participating. Thank you to Dave, as always, for his insights, and hope to see you again soon. Thanks very much, and goodbye.